Congratulations, Opendoor. We knew you could regain compliance with Nasdaq's minimum bid price requirement. It was only a matter of time your shares maintained a closing bid price of at least $1 for 12 consecutive business days, from July 15th to 30th. Fantastic. Shout out to all the bullish buyers who made it happen. Now all can rejoice, as a special meeting of stockholders has been canceled. That meeting, initially scheduled for August 27th, 2025, was meant to consider proposals related to a discretionary reverse stock split. Other good news came in the form of a weaker-than-expected employment report, which suggests the Federal Reserve might lower interest rates at its next meeting in September. This potential rate cut could positively impact the housing market, which has been nearly frozen since interest rates soared in 2022, affecting Opendoor's business and others dependent on real estate transactions. Opendoor's financial prospects are expected to be clearer after it reports earnings next week. Analysts anticipate revenue to be flat at $1.5 billion, with a narrowed loss per share from 4 cents to 2 cents. Given the uncertainty in the macro environment and recent interest from meme stock investors, the stock is likely to remain volatile. Management has taken steps to streamline the business, including layoffs and cost cuts, and is slowing the pace of home purchases. However, the company will likely need mortgage rates to fall and housing demand to strengthen to turn a profit. With the Nasdaq compliance issue resolved, Opendoor can focus on its business operations and responding to market trends.